Hello, very good evening. Joy to see you. Hi Nikhil. Hi Srirag. Hi Pratyusha. Very good evening, and congratulations to all the students who are clearing EA. Please do message me while some of you feel that you should connect with me only after you complete all the parts of the examination. But even little progress every day, it goes a long way. Okay, so please make sure that you keep me posted, because otherwise even I will not be knowing. So please let me know. Yeah, keep coming, like, share. Yeah, please keep coming. Yes, so where did we stop the other day? Okay, so we stopped at 14 questions. We did 14 questions. Okay, fatafat we will complete the remaining 9 questions also. Okay, so let's get started with this 15th question. Chalo, let's get started with the 15th question. Chalo, go ahead and solve. Submit your answers. Okay, let me read the question for you. I hope my voice is audible. Miss Kavita owns a home. Okay, let me appear here. Yeah, Miss Kavita owns a house that she rents to non-related parties. She incurred the following costs during the year: $400 to resurface a tub in the master bathroom, $500 to paint the kitchen after installing new cabinets, $2,000 to replace cabinets in the kitchen, $600 to replace the built-in dishwasher. How should these costs be characterized and in what amounts? Okay, fine. Hi Vamshi, very good evening. Shall I go ahead and answer people? Yeah. Painting the kitchen, replacing the cabinets, replacing the built-in dishwasher, and then resurface a tub. Okay, so B, C and D are capital expenditures. I mean, $500 that painting the kitchen after installing new cabinets, so that's part of the installation process. Then $2,000 to replace cabinets, it's a replacement cost. $600 to replace the built-in dishwasher, that is also a replacement cost. Now $400 to resurface a tub in the master bathroom, just a resurface, that's all. So $400 will be kind of repairs, and then the balance 500 plus 2000 plus 600, so 3100 will be improvements that needs to be capitalized. Okay, chalo, so A is the right answer here, just to let you all know. Okay, A is the right answer. Let's move on to the next question. Yeah, go ahead and answer. Which of the following rental expenses must be recovered by taking depreciation? Yeah, good Vamshi Krishna. Answer 16th question. Yeah, hi Pavan, very good evening. Yeah, which of the following rental expenses must be recovered by taking depreciation? Painting, installing a large backyard fence, yeah, kind of, yes. Repairing, no. Home insurance premium, no. So it's a simple question. Yeah, go ahead, answer. Let me know what's the right answer here. For 16th question, what's the right answer? Absolutely. Yes, very good, Pavan. Right. Okay, so B is the right answer. Fine. Chalo, let's move on to the next question. Yeah, good. Chalo, let's take up the next question. Chote questions hai sab. Okay. All these are small questions. So let's move on to the next question. Good, add a little explanation there. Chandra, the landlord made several repairs and improvements to his rental house. He spent $1,500 to add carpeting in the hallway. Okay, $550 for a stove, $750 for a refrigerator, $170 to replace the broken faucet in the bathroom, and $590 to replace damaged shingles on the roof. How much of this cost must he depreciate? Go ahead. Tell me what all expenses. How much? Vamshi, check your answer. 1,500 was carpeting. That's a capital expenditure. 550 installing the stove. It's an improvement. 750 putting a refrigerator. Yes, improvement. 170 to replace, it says. Okay, 590 to replace, it says. So both 170 and 590 are kind of repairs, but 1,500 plus 550 plus 750, they are improvements. Okay, so D is the right answer here. D. Okay, yeah, right, absolutely good, Vamshi. Right, everything adds value to the property. Very good, Vamshi. Nice. Chalo, let's get to the next question. Chalo, solve the 18th question now. Let's do this fatafat. Okay, fine, no problem. Chalo, 18th question. For taxpayers who rent part of a property in which they live, which expenses are reported on Schedule E and not on Schedule A? For taxpayers who rent part of a property in which they live, which expenses are reported only on Schedule E and not on Schedule A? Will Schedule A have home insurance and mortgage insurance? Yes. Property taxes and repairs? Property taxes, it will have. Then utilities and home insurance, C, this will go into Schedule E. Then D, depreciation and property taxes, Schedule E, right? So C is the answer. Utilities and home insurance, it will go only on Schedule E, not on Schedule A, because property taxes also comes in Schedule A. A, B, D will come on Schedule A but not C. So utilities and home insurance. Okay, so yeah. Okay, Akhil also answered a little late. Is streaming delayed or why is it? फटाफट आंसर करो. Yeah, मेरा schedule ज़रा busy था, being month ending, so I couldn't come live. You don't be slow. Please come participate. Yeah, good Akhil. Nice. Pawan, right? Right, Pawan, good. C is the answer, right? Vamshi Krishna, very good, nice. Yes, Akhil, very good, nice. Okay, chalo, let's take up the next question, please. Right, फटाफट करेंगे आज. Yeah, go ahead. 19th question. Taxpayer purchased a heating, ventilating and air conditioning unit for a rental property on December 15th. Okay, it was delivered on December 28th and was installed and ready for use on January 2nd. Okay, it was delivered on December 28th and was installed and ready for use on Jan 2nd. When should the HVAC unit be considered placed in service? December 15th it was purchased. December 31st, no. Jan 2nd, yes. See, when it is considered placed in service, when it is installed and ready for use, right? So it was installed and ready for use on Jan 2nd. Okay, December 28th. Okay, anyways, so I'll wait for your answer also. I'll wait for your answer. Good Shruti, very good. Jan 2nd, yeah, because that's the time, when the property was installed and ready for use. So Jan 2nd, right? Okay, and good. See, when you can use it, very good Hafiz. Akhil, good, right? See, Jan 2nd, property considered placed in service when it is ready in use, right? Very good, nice. Pawan Kumar, the counting starts on when the unit is ready for use. Perfect. Yeah. Perfect. So Pawan Kumar, right, it's working. Right, fine. Let's take up the next question. Ramani's home is used exclusively as a residence all year except for 10 days. During this time, Ramani rents out her home to alumni while the local college has its homecoming celebration. Choose the best answer. Okay, is used exclusively as a resident all year except for 10 days. Chalo, again this is that 14 days rule. So whenever something like this comes, your brain should tell you, "Arey bhai, ye wo hai." The rent does not need to be included in income because it was rented fewer than 14 days during the year. Right? Sahi lag raha hai, right? It looks like it is right. Then the rent doesn't need to be included in income because it was rented for 10 days or more. No. The rent is not included, but the expenses can be deducted if the taxpayer itemizes. No, because we know that whenever a home is rented for 14 days or something, neither the income is included nor the expenses are deducted, right? So C is wrong. Let's go to D. The rent is not included in income and the expenses cannot be deducted as rental expenses. Yes, D is more appropriate. A is also right, but D is more appropriate because it covers the expense item also. So D is the right answer. Fine, let's see who all have given the right answer. Akhil gave this. Property is considered placed in service in a rental activity when it is ready and available for a specific use in that activity. Yes, perfect, Akhil. This was the explanation for the previous question. Very good, nice. Right, dwelling rule applies here. Good, right, good. D, as it is rented for 15 days, no income is reported, so no deduction on expenses. Very good, Vamshi. Yeah, Nilesh, very good. Renter fewer than 15 days, very good. Right, less than 15 days, right. Shruti, good. D is the right answer, very good, ma. Akhil, if a taxpayer uses a dwelling unit as a home and he rents it fewer than 15 days during the year, does not include in income any of the rental income. Perfect, very good, awesome. Chalo, let's go to the next question. Chalo. Perfect. Dwelling rule again, right? D, 0. Less than 15 days rented, so no income to be reported and no expenses to be deducted. Right, perfect. Akhil, very good. Nice. 0 because it is less than 15 days. Perfect. Chalo, let's move on to the next question. So D is the right answer here. Right. Nilesh, very good. D. Rent for less than 15 days, so rental income and expenses not reported on return. People who are joining us, for new, I would request you to please add a line, because listening to that, again and again and again and again, it gets registered in your subconscious mind, and during the examination, you just have 2 minutes to solve each MCQ. It should be, because आपने सुना है वो, it will be there, somewhere registered in your subconscious mind. Okay, chalo, very good. Yeah, same explanation as in case of question 20. Dwelling rule less than 15 days. Very good, Vamshi. Very good, ma. Chalo. Let's get to the next question. Chalo, 20 seconds. Prithvi owned a cottage on the lake. During the tax year, he rented the cottage for 10 days to a stranger and used the cottage for 20 days for his own personal use. The cottage was not used the rest of the year. Prithvi had rental income of $1,000 and he paid $600 for repairs. How should he report these activities on his tax return? Old wine in a new bottle. Yeah. Right. Good, Pavan. 15 days. So rental income reported. 15 days. So rental income, reported income, and rental income not deductible. Okay. You meant saying what? What did you mean to say here? Which alphabet is the right answer, Pavan? It's not D. Yeah, dwelling unit not reported. Nilesh, very good. Again same, 0, right. So mention the alphabet also, Akhil. Good, I consider it C for now. Yeah, it was rented for 10 days, so again dwelling rule. Good, Hafiz, very good. Hey, Suraksha, good, back. Dwelling rule same again. Very good. Nice. Hi, Shruti. Dwelling rule applies here. C. No expenses, no income. Perfect, ma. Perfect. Very good, Vamshi Krishna. C. 0 income, so 0 expenses. Dwelling rule applies. Very good. Awesome. Chali. Let's take up the next question. I think this is the last question. Yeah. Chalo. Go ahead. Tarun, who is single, owns a rental property building, rental apartment building property. This is the only rental property that Tarun owns. He actively participates in this rental activity as he collects the rents and performs ordinary and necessary repairs. During the year, Tarun had a loss of $30,000 on this rental activity and had no reportable passive income. His adjusted gross income without regard to this rental loss is $60,000. How much of the rental loss may Tarun deduct on his return? How much? Very good. Go ahead. He has no reportable passive income. So this passive loss has to be adjusted against some non-passive income. कितना adjust कर सकते हैं? How much of passive loss can you adjust against non-passive income on something, where you have material participation? I mean, actively participates, material participation. बताओ. Yeah. I'm also sorry I missed 2-3 days. I think we missed good 3-4 days, nahi? Sunday, of course. So 3 days we missed. I was also busy with my month-end closures. So, yeah, D is the right answer. Good wish. Right, perfect. D is the right answer, people. Okay, so others maybe they thought okay किसी ने आंसर दे दिया तो हम क्यों दें. Continue. Om Shri Krishna, very good. Akhil, very good. Nilesh, very good. Actively participated in rental activity, so deductible up to 25,000. Very good, Nilesh. Pavan, very good. Nice. Okay, chaliye. So we will get into the next topic soon, right? Everyone you fight is not your enemy, and everybody that helps you is not your friend. Yeah. Wow. Everyone you fight is not your enemy, and everybody that helps you is not your friend. Okay, think about it. And I will be back in 5 minutes with a new topic. Okay, just go through the new topic and I'll be back in 5 minutes. Ciao. Okay, fine, I'm back. Chalo. Okay, go ahead and solve this. We are in capital gains. Okay, we are now in capital gains. एंड देयर इज अ वेरी बिग चैप्टर. ओके, ज़रा फुर्सत से आराम से सॉल्व करना. गो अहेड. Chapter 11, capital gains. This has good 100 plus MCQs. So ज़रा फटाफट करेंगे अपन. Yeah, Akhil, good. 28%. It's a number based question, so that's the only answer. The highest long-term capital gain rate, 28%. Okay. Chalo. Very good. Madhivani A. Very good. Right answer. A long-term capital gain tax on likes, antiques, fine art, metal precious, ETF. Yeah. A meant. Okay. Right. Okay. Fine. Hafiz, very good. हफीज भाई किसको चुनूं मैं? yeah, okay, you corrected, very good. Okay, fine. Chalo. Yeah, 28% for collectibles and section 1202 qualified small business stock exclusion, and 25% for unrecaptured section 121 gain. Okay, fine, very good. 121 gain or 1251 gain? Okay, chalo. So 28% is the right answer. Chalo, let's move on to the next question. Yeah, good, Vamshi Krishna. Chalo, go ahead. Second question. If you can read, these questions properly, that's what I say, each question has three other questions. So while you feel that you are solving some 900 or 1000 MCQs, in fact you are solving 4000 MCQs just for one part. I mean, if you understand it. And also don't look at the number of MCQs. It is the concept. अभी कैसे था वो dwelling unit rule पे, right? वो 14 days का. Yeah, if it is less than 15 days, don't include that, right? 14 days or lower, don't include income, don't deduct expenses. So something like that. So once you understand that base concept properly, then rest of the things they become easy. चलो, तो यहाँ पे भी देखिए, with regard to capital gain tax rates, which of the following statements is false? The capital gain tax rate for collectible gain is 25%. Just now, we have seen, people mentioning, Vishwa wrote this, 28%. 28% is the capital gain tax rate. Next, the tax rates that apply to a net capital gain are generally lower than the tax rates that apply to other income. Obviously, the tax on capital gains is certainly lower than the tax on the ordinary income. The maximum capital gain tax rates are 0%, 15%, 20, 25 and 28. Okay, right. So C is also right. Then if capital gains tax is calculated using the maximum capital gain rates and the regular tax computation results in a lower tax, the regular marginal tax computation applies. Right? Correct. So A contradicts C. So A is the right answer. Okay. A is the right answer. Chalo, who gave the answer now? A. Yeah, max is 28. Good, Hafiz. Good, Nilesh. Very good. Very good. Good, Nilesh. Yeah, good, Akhil. Good. Because we know 28% is the highest one. Yeah. Madhivani, since max rate for collectibles is 28%. Very good. Vamshi Krishna, 28%, not 25%. Suraksha, good. Next, Vishwa. A, for collectibles max rate is 28%. Generally, LTCG rates are lower than other incomes and STCG. If CG tax is more than the regular tax, then regular tax prevails. Very good. Nice. Chalo. Let's attempt the next question. So, in the previous question, A is the right answer. Okay. Chalo, let's move to the next one. Okay, fine. Dharma's brother purchased 100 shares of Clockwork stock for 15 per share on December 30th. Dharma inherited, just a second. Yeah, Dharma inherited the shares of Clockwork stock from his brother on September 15. It had a fair market value of 15 per share. On December 20, he sold the stock for $20 per share. What is the amount and character of the gain? Inherited shares. Inherited shares sold. Okay, 15 minus 20. Okay, 5 into 100 shares. $500 is the gain, and that's a long term. That's all. Right. So here D is the answer. And who all have given the answer here? Right. Vishwa Chaitanya. Very good. Very good, Vishwa. D for inheritance, irrespective of the D for inheritance, irrespective of the period. Gain is the long-term capital gain. Okay. Vishwa, then Nilesh. Yeah, $5 gain, 500 gain inherited. So FMB considered. Holding period automatically long-term. Very good. Akhilesh, very good. D. Shruti, D. Very good. Vamshi Krishna, D. Yeah, in case of inheritance, the gain is treated as LTCG, irrespective of holding period. Yeah, $500 gain. Madhivani, very good. Suraksha, very good. Inherited property is always a long-term property, and the amount would be $500. Very good. I love this. Very good. Hafiz, D, as it is retained for more than 1 year, considering as LTC. During inheritance, we have to consider the FMV on the date of sale or death, whichever is lower. Awesome. 1500 minus 1000, is equal to $500 gain. Awesome. Akhil, inherited property is considered held long term, no matter how long it is actually held. So report on form 8949 and schedule D. Awesome, Akhil. Hafiz, as it is retained for more than 1 year, considering as long-term capital gain during inheritance, we have to consider FMB on the date of sale or death. Okay, fine. Okay, consider the second one, right? Okay, good, Hafiz. Pawan, $500 gain. Inherited property is treated as long-term, irrespective of the holding period. Absolutely perfect. Awesome. So, let's go ahead and solve the next question. Let me read the question for you. Hemant brought 2 blocks of 400 shares of stock. Okay. The first in March 2019 for 1200. The second in March 2020 for 1600. In June 2020, he sold 400 shares for 1500 without specifying which block of shares he was selling. So Hemant's sold stock represents A. Okay, yeah. Go ahead. Answer. FIFO method, short term capital gain क्या है? Anjali. Okay, Nilesh Kumar. Right. C is the right answer. See, 1200 is the original purchase price, March 2019, and sold in June 2020 for 1500. So $300 long term. Okay. So C is the right answer. Very good, Nilesh. Vishwa, if we cannot identify the block of shares in the block of shares, the rule is what comes first will go out first, right? So considering the first block purchased on March 2019 is sold, so LTCG of $300. Very good. Hafiz, C as not mentioned, going with the first 400 blocks and it is more than 1 year, LTC of 300. Very good. Akhil, right, C using FIFO basis. Very good. Suraksha, first out basis, consider the $1,200 he sold, so 1500 minus 1200 is equal to 300, and hence long term as more than 1 year. Very good. Anjali Mishra, very good. You corrected. Okay, good. Nagalakshmi, good to see you. C, as stocks hold held for more than 1 year, so those are considered as long term, and sold stocks were not mentioned, so we consider them as the stocks of 2019 as they were purchased first. So $300 is the gain. Very good, ma. Nice. Pawan Kumar, long term capital gain $300 using FIFO, first in first out rule. Very good. Vamshi Krishna, long term gain of $300 using FIFO method in case of inventory, which says items purchased and produced first are sold, consumed and disposed first. Madhivani, very good. Chalo, let's get to the next question. Yeah, same like earlier question. Right. Same as earlier question. Right. Absolutely. $3,000 purchase price 2018. 2020 sold for $4,000. So gain of $1,000 and it's long term. Okay. Anjali, very good. Yes, Nagalakshmi, FIFO method 4,000 minus 3,000, 1,000 LTCG, very good. Vishwa, applying FIFO based accounting, 2018 shares has the base of $3,000 has been sold for 4,000, so LTCG of 1,000, very good. Nilesh, FIFO cost basis used, 4,000 minus 3,000, $1,000 gain. Suraksha, right, again considering the FIFO method, 4,000 minus 3,000, right, very good. Akhil Kumar, right, gain $1,000 using FIFO as we discussed earlier, very good. Hafiz, same as previous question, long term gain, yes, and a FIFO method applied, right. Madhivani, gain of $1,000, the same first in the first out method since not identified the specific block of stock, very good. Assuming FIFO method, gain of $1,000 and holding period of greater than 12 months, very good. Hey Rupali, welcome back. D, LTG, long term LTCG, long term capital gain of $1,000, yeah. Pawan Kumar, very good, 4,000 minus 3,000 again using FIFO rule, very good. Chalo, awesome. Let's get into the next question. Go ahead. Yep. A taxpayer has both short-term capital loss and non-taxable distribution from an investment. The following statements are correct, except, it means what is the incorrect statement that we have to find out. Short-term capital losses have no effect on basis. Absolutely, they have no effect on the basis. Non-taxable distribution is a return of capital invested, right? The basis of the investment is reduced by non-taxable distribution. Correct. It's a reduction in the capital. Short-term capital losses reduces the basis of the investment. No, D is the opposite of A. When you know that A is a correct statement, then D is incorrect statement. Right. So D is the right answer. Right. Good. Chalo. Let's see who all have given the right answer. Vishwa Chaitanya. Short-term capital loss cannot reduce the basis of the investment. Right. D is the incorrect statement. Good, Rupali. Vamshi Krishna. Short-term capital loss. Right. D. STCL does not reduce the base of investment. Good, Rupali. Pavan, short-term capital loss does not affect base of the investment. Good. I told you not to type in all caps. No. D is the incorrect one. Good, Anjali. Nilesh, STC loss does not reduce the base of investment. Good, Nilesh. Suraksha, D, short-term capital loss does not affect the base of investment. Very good. Akhil, D1 is not valid one. Very good. Madhivani, D, short-term capital loss does not reduce the basis. Very nice. Very good. Chali. Let's get to the next question. Okay, it's a simple question. Regarding the holding period for investment property, begin counting on the acquisition date and include disposition date. What for? What is the use of that? The day the property is disposed of is not part of the holding period. Okay. It determines whether any capital gain or loss was short term or capital gain or long term, right? All of these choices are correct statement. No. C is more appropriate. Go ahead. It's investment property. Yep. Good. Good, Anjali. Investment property held for more than 1 year, long-term capital gain, or less than 1 year, short-term capital, right? Nilesh, right? Holding period for any capital gain or loss, right? Akhil, good. Vishwa, good. It determines whether the gain or loss is short-term or long-term. Generally, the holding period is calculated from the day after the purchase or acquisition, and the date of sale will be included, right? Very good. I love this. Vamshi Krishna, it determines whether any capital gain or loss was short term or long term. Good. C, by holding period we can determine if it is long term capital gain or short term capital gains. Very good. Nice. Suraksha, right, holding period determines if it is a short term or long term investment. Very nice. Very good. Chaliye, let's take up the next question. This is also an easy question. Go ahead and answer. Which of the following losses would be deductible on the taxpayer's return? Loss on sale of stamp collection, not held for investment, loss on sale of stocks, loss on sale of personal residence, loss on sale of an automobile. Which one would be deductible? Good. Yeah, capital loss on stock would be deductible. Very good, Nilesh. Anjali, capital losses on investment or business property are deductible. Loss on sale of personal property is not deductible. Very good, right? As sale of stock is type of investment property, so it will be deductible. Vishwa Chaitanya, stamps, personal residence and automobiles which is not specifically held for business are personal properties. Such losses are not deductible, so only the sale of stock. Good. B, Madhivani B, loss on sale of stocks. Very good. Okay. Pavan B, very good. Okay, sorry. Yeah, Vishwa's answer. Yeah, B, loss on sale of stock. Madhivani, good. Pavan B, right. Rupali, loss on sale of stocks, right? Pavan, very good. Akhil, yeah. Pavan, good. Obedience always brings blessings. Yeah. Akhil Kumar Raparthi, losses on the sale of personal property such as an automobile, a loss on the sale of personal residence or a hobby stamp collection are not deductible. Very good. Fees, stocks are investments, deductible, and rest all looks personal. Rest all are personal. Then B, Vamshi, loss on sale of stock is deductible. Very good. Awesome. Chalo. Let's take up the next question. Chalo. Yep. Yeah, go ahead. Certain questions are pretty straightforward. Mamta brought stock for 1500 plus a 25 purchase commission, so 1525. She sold a stock for 2000 from which 25 sales commission was deducted. Okay, her 1099B shows the gross proceeds of 1975 as the sales price, okay, and did not report a basis. Okay, fine. So consider sales price as 1975 and stock price as 1525. So 1975 minus 1525, 450. A is the right answer. Khatam, right? Okay, so किसने सही उत्तर दिया? विश्व चैतन्य, very good, 450A. Hey Krishna, 450, right? Nilesh, good, 450. Anjali, good. As in a form 1099B, it is shown as 1975 as net sale, and base of the stock is purchase price plus commission 1525. So 1975 minus 1525 is equal to $450 gain, right? Sandeep, very good, A is correct. Akhil, A is correct. Vamshi, A is correct. Suraksha, A is correct. Commission must be included in the actual purchase price of the stock. Hafiz, sale price 2000 and the sale commission was deducted, so 1975, therefore 450. Madhivani, A. Pawan Kumar, A. Very good. Chalo, let's take up the next question. Yup. Right? 500 cash में 5,000 loan, 1,000 accessories. So 6,500 is the purchase price. 8,000 is what collector paid Chari. So 8,000 minus 6,500, so 1,500. Right? So A is the answer. And अपने नीलेश भाई ने सही उत्तर दिया यहाँ पे. Very good. Anjali, very good. All capital gain is taxable and must be reported on TP tax return, right? Krishna Kumar, very good. 1,500 is taxable gain. Purchase of new cycle doesn't matter here. Good. Vishwa Chaitanya, very good. 8,000 minus 6,500, 1,500 is taxable gain and it's personal property. If it's sold for loss, it will be deductible. Hafiz, right? Perfect. Right. Nagalakshmi, very good. As it is personal asset, loss on personal asset is not deductible, but gain is always taxable, right? Good. Momshi Krishna, good. 1,500 taxable, 8,000 selling price, right? Gain on sale of personal assets is taxable, Rupali. Good. Akhil, taxable gain is 1,500, good. Pavan A, Suraksha, very good, right? Nice. Suraksha. Madhivani, very good. चलो, I'll have my coffee. Okay, तो आप भी अपना coffee ले लेना. I will see you soon. Okay, let's take a 10 minutes break or something. Yeah, we'll be back in a while. Chalo, bye. Okay, welcome back. Chalo, let's get started. Chari's question is over, right? Yeah. चलो ये क्वेश्चन करेंगे और एक 5 क्वेश्चन विल ट्राई टू डू एटलीस्ट. या चलो गो इट सॉल्व. Okay, Ravi collected baseball cards as a hobby. Ravi had shared his interest in this hobby with his niece Suhasini, who was also an avid card collector. At the time of his death in 2019, Ravi's collection had a fair market value of $10,000 and an adjusted basis of $2,000, while Suhasini's collection had a fair market value of $5,000 and an adjusted basis of $1,000. Upon Ravi's death, his entire card collection was inherited by Suhasini. With the death of her uncle, Suhasini lost interest in the hobby and sold all of the cards for $20,000 in 2020. So sad. What is Suhasini's gain on the sale of these baseball cards? Go ahead, answer. Good. Come on. Answer. Where are you? Okay, anyways, let me solve this for you. Okay. See, the sale price is 20,000, and because the person is no more, we have to take the FMV at the time of death, which is 10,000. Ravi's thing at the FMV. And then Suhasini, because she is alive and she had an adjusted basis of $1,000, so 10 plus 1 is 11. That's the cost price, and sale price is 20,000. So 20 minus 11, 9,000. So B is the right answer. Okay, and I believe Krishna Kumar answered it right. Very good, Krishna. Chalo. So B is the right answer, Bhaiya. Okay. Chalo, yeah, good. Nilesh also answered it right. Very good. Very good. Very good. Chale. Let's take up the next question. Twelfth question. In 2013, Hemant brought $1,000 shares of ABC Corporation stock for $5,000, plus he paid an additional $100 commission to his broker on the purchase. In 2020, he sold 500 shares for $3,300 net of the commission. What was the sale price for the shares and the resulting gain and loss? So this is a question on the sale price and the resulting gain or loss. Yeah. Yeah, please go with the explanation given by Nilesh and Krishna. Yeah. Yeah, add a little calculation there. I see the answer. Yeah, answer is right, Krishna. Just add a little calculation there, how we arrived at 750. Good, right? This is also a good way. Another way would be simple, people. $5,000, right? For 1,000 shares, it's 5,000 plus an additional 100. So 5,100 for 1,000 shares. So, and he sold only 500 shares. So 5,100 by 2, half of that. So 2,550. 2,550 minus 3,300. Khatam. Okay, so 750. Right? That is also another way of getting this right. 3,300 minus 2,550, which is 5,100 by 2. Okay, so C will be the right answer. Very good. Yeah, 3,300 sale proceeds and 50 gain. Chalo, next question. Go ahead. Good, Anjali. Nice. Good, Vamshi. This for the previous question. Chalo, let's see this question now. 13th question. Jagan's antique car caught fire. Oh my god, and was totally destroyed. The car was appraised for $22,500. Jagan only had it insured for $15,000. Since this was more than enough to cover his adjusted basis of $9,000. Okay, Jagan received the full $15,000 from the insurance company to reimburse him for the loss. He decided not to replace the car. What should Jagan report on his tax return? Chalo. Income minus basis. Karo, jaldi karo. इंश्योरेंस में ऐसा पैसा आए तो अच्छा ही है ना, नहीं? Perfect. Adjusted basis is 9,000 minus insurance received is 15,000, so 6,000 is reportable as income. Okay, very good, Hafiz. Chalo, let's. Yeah, good. Very good. Very nice. Right, Akil. Very good. Chalo, let's get into the next question. Yeah, very good, Nilesh. Very good. 14th question. Fast. Good, Vamshi. Good. Okay, I'll read the 14th question for you. Farooq purchased 100 shares of Oak Company common stock for $100 per share. In June of 2020, Oak Company declared a $2 for one common stock split. Farooq sells 50% of his Oak Company common stock shares for $200 per share immediately after he receives his stock split shares. He sells his remaining Oak Company shares at the end of 2020 for $100 per share. What is Farooq's total 2020 gain from the sale of his Oak Company shares? Go ahead. Yeah, a little bit of maths is involved here. Good. Krishna Kumar again. Right, 30,000. It is 20,000 plus 10,000, right? 30,000 proceeds. Cost basis 10,000. Right. Very good. Very good. Very good, Krishna Kumar. Good. Very good. Who else has answered? Nilesh. Right. 100 share split. Right. So 200 share sales. 30,000 minus original basis. Right. Original basis. Yeah. 20,000 profit. Right. D 20,000. Right. That's all. 100 shares. 100 shares, that's 10,000 is the purchase price. Now stocks are split into two, so the 100 shares become 200 shares. Now the 200 shares, for 200 shares they paid $10,000. It's like that. So before stock split the share price was $100 per share. After stock split the share price will be $50 per share. Okay. Now how many shares were sold? Yeah. So he sells his remaining stock at the rate of $100 per share. Okay. So sale price is 30,000. 30,000, right? And less basis 10,000. The initial share is like basis is 10,000. So total gain is 20,000. Right. Perfect. Yeah. So D is the right answer. Perfect. Yeah. Good. So let's solve the last question for the day. Very good, Afiz. Very good. First 100 shares sold for 200, rest 100 for 100. Yeah. Total 30,000. Sarla's cost basis for 600 shares of KLM Corporation stock she purchased in June 2005 and sold in March 2020 was 2,400. Sarla sold the 600 shares for 4,400 and paid $100 sales commission. Her broker reported the gross proceeds of 4,400 on Form 1099B, but no cost basis was reported on Form 1099B. What was the sale price and the amount of gain on these shares? Go ahead. check your answer, Krishna. Check. 43 minus 2400. What is the answer? $1099B reported only 4,400. Of course, that $100 also has to be claimed. That sales commission, we can't ignore that. Go ahead. Good, Madhu Mohan. Good. Add a little explanation, please. B. Very good. See, since 1099B reports only 4,400, so we will take 4,400. However, when it comes to expenses, the purchase price is 2,400, had that $100 sale commission. So 24 plus 100, 25. 25 you please subtract from 4,400, you get 1,900. That's all. Vishwanath, good. 4,400 minus 2,500, very good. Nice. Hafiz, commission has to be added for sales price, but broker says 4,400 only. Hence, adjusted basis is 2,400 minus sale price 2,000 and deduct 100 sales commission, which is 1,900 as gain. What did you mean? Okay, anyways, I take B as the answer. Good. Maybe some typo error. Very good. So B is the answer in this question. Okay, so we will close here, people. Yeah, if you want, you continue to practice the questions still. Okay, and it's very important that we keep practicing, and even by passing just one paper, people are getting jobs. So I don't want you to take things light. Okay, do very well, and please don't waste your time. Let all these efforts bear good fruits, good results for you and for the people who are looking forward to you. Okay, all the very best. Good night. And if you still wish to solve for another half an hour, please sit, solve. Or now it's 10:40, get up at 11. Okay, chalo. Good night, take care, bye bye.